With regard to inflation, as we all saw, the promising disinflation of the second half of 2023 unceremoniously halted through the first quarter of 2024. Now, I had expected bumps in the road, but the Q1 2024 bump threatened to become a hill to climb. Yet, while the lack of progress toward the inflation target was concerning, inflation did not reignite. And while I remain very attentive to inflation risk, the latest inflation data have been quite promising that progress on disinflation has resumed. Last week's CPI inflation release for May was very welcome, and the kind of price data I want to see, and I think we all want to see more of. But I would add the caveat that our inflation target is the PCE price index, not the CPI, the May reading of which is not due for another 11 days. If the higher inflation in the first quarter was a bump on the road, I want to make sure that the lower inflation we are seeing so far in the second quarter is not a pothole. So I remain focused on seeing inflation return to a clear path and return to that path toward our target of 2% annually. Inflation is way down from where it was a year ago, but with the high inflation readings between January and March factored in, progress in recent months has been modest. So I believe that the current policy interest rate, which has been held steady for nearly 11 months, will continue to serve us well for a bit longer, holding us in restrictive territory to bring inflation back to target and to mitigate those upside risks. So over the ensuing months, I'll continue to closely monitor the data, both hard and soft, on inflation, labor markets, and economic activity. And I will be asking whether it is or is not the right time to decrease the policy rate. When that time will be exactly, I just don't know at this point. I have a forecast for inflation, employment, and economic activity, slowing but above trend growth, a modest rise in the unemployment rate, and a long glide back to target for inflation. If all of that happens to be as forecasted, I think one rate cut could be appropriate by year end, as well as a medal for myself for being the best economic forecaster ever. Because look, any forecast remains just that. It's a forecast. I think this is important to emphasize. It's a forecast. It is not a lockdown commitment. My commitment is to remain data dependent because this is how we get through this uncertainty and make sure inflation returns to target sustainably. Indeed, I see 2 cuts or none for this year is quite possible if the data break one way or another.